Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the September 2nd terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone out there had just simply a fantastic Labor Day celebration. It is back to work, back to school. Summer, I guess, is over. It's not over down here in the South, that is for sure. We have had some hot weather down here. But look, folks, it is a terrific Tuesday. Let's make sure that you and I do everything that we can, have just simply an extraordinary day, not just today, but since it's the beginning of September, so to speak, let's make sure that you and I do everything we can to have a fantastic month. Now, for the next 2 hours, I'll do everything that I can to share with you extraordinary tools that help us identify where price is headed to. That means we'll look at the A to B equals CD tool. That's what we affectionately refer to as our lightning bolt pattern. So we'll go find some lightning out there. Of course, we look at the Japanese candlesticks. We look at Fibonacci retracements and expansions. And, of course, this is a radio call-in talk show. That means that you can give us a call at 877-927-6648 or internationally at 727-445-1044. Together, you and I, we can go hunting for bulls and bears out there. So I'd love to hear from you. And before I came onto the air, yeah, it's a TV talk show, not just radio. It's a TV talk show out there. I ran across an old African proverb. It says this: he who forgives ends the quarrel. Think about that. For any of you that may have been harmed by somebody that believes that they're in the right, how about take this aggressive action? Even though you know they probably are wrong, go out there and forgive them. That'll go ahead and stifle that quarrel that's out there. In any event, it is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures up 11 points. They're trading out at 17,096. We've got S&P futures up 2, trading at 2,003.75. Goldilocks back $17 right now. She's trading out at 12.69. Silver's off 22 pennies, trading at 19.26. Light sweet crude is off $1.16. It's trading at 94.80. We've got a lot of movement here in the currency market as well. King dollar up 17 pennies, 172 ticks. It's trading out at $82.95. We'll go take a look at the Japanese yen. Of course, we know that the Japanese yen had broken out. It is weakening. We saw that break of the trend line. The suggestion there was look for long positions. That was an easy call. That is continuing to move higher out there. If we take a quick peek across the globe out here, we're going to find that over in Germany right now, the DAX is up 32 points, well off its session highs. It has been up as high as 95.78. It's traded at 95.12 right now. FTSE is flat. Totally flat. It's trading at 68.25. Over in Asia last night, a little bit of a mixed bag. The Nikkei 192 points, a little over 1%, 1.25% to be exact. The Hang Seng down 3 points. That was a flat market out there. And the Shanghai up 32, up 1 3/10%. Again, our call number is 877-927-6648. So where do we begin? What I want to do certainly this morning is take a look at both multiple time frames out there, right? So we want to take a look at, hey, how did the month of August end? Where are we? What does that say from a long-term standpoint? And then we'll take a look at the shorter-term standpoints. But let's take a look at the shorter term as we speak right now. Let's switch over and let's go take a look at the, let me try to hit the right tab out here. Let's go take a look at the S&P futures. Let's look at it. I've got 4 different time frames out here. So we've got the 120-minute, 2-hour chart. That's my upper left-hand screen. If you're watching us on TigerTV, don't forget, if you're listening on the radio or your mobile device at tfnn.mobi, go over to the right-hand side of the page. You'll see a button over there, and you'll see watch TigerTV live. You'll be able to watch this show stream live to your mobile device out there. Of course, the archive is on Channel 9. You would see on the upper left-hand side of my screen the 120-minute time frame chart. The upper right-hand side of the screen, the 300-minute chart. A 5-hour energy drink brought to us by our man Saratoga Bob in the Tiger's Den. In the lower left, we've got the daily chart. In the lower right, we've got the weekly chart. We're looking at the S&P futures contract. If we take a look at the S&P futures contract, during this time frame here, between 6 a.m. and 8 a.m., we actually see a little bearish reversal signal out here. So that says that any close above the high today, 2006.25, that was the highest price during that time frame. So you might say, hey, what kind of reversal signal out here? Really, you got several. Number one, You had a key reversal session out here. Market is was relatively extended, so we'll go ahead and we'll give it that. Number two, you had a bearish engulfing candle that was engulfing this little doji that took place between 4 and 7. Then you've got these three candles out here. This is referred to as an evening star. Now, that's a cool thing both for bulls and bears, because if you're bearish and you see a close above this, that says to me that you're going to see higher price. Now, where would that higher price likely take us to? So just so we know, here's where the bulls and bears are hanging out just as we come back from summer out here. And that's at the 2006.25. Now, this is a 2-hour chart. The next time frame doesn't close for another 46 minutes out here at 10 a.m. If the highs get taken out, the likely price target, that's where we're going to use our lightning bolt. So we're going to go find lightning out here. We're going to use just a simple A to B equals CD tool. We're going to use a small A to B equals CD. That means we're coming back to the 8 a.m. between 6 a.m. and 8 a.m. on August the 28th. That's going to be your A point. Your B point out here is going to be the high at 2 a.m. on August the 29th, between 2 and 4. Your C point is this retracement down here between 10 and noon on August the 29th. The 1-to-1 A to B equals CD says, therefore, you ought to see a punch up into the 2008.50. Now, punching up into 2008.50 and closing back below that 2006.25, that is not what bulls want to see. What bulls want to see is getting over that 2006.25, staying over that 2006.25. That sets up a run then to the 2013 level out there. Again, right now you're trading out at 2004. That is an ES, meaning there is no divergent pattern out here, meaning that it has the freedom to run as soon as it can overtake the bears. We know where the bears are hanging out. They're right there at that level of 2006.25. We'll see if they can defend that territory. That is what the 120-minute time frame chart shows us. We take a look at a 300-minute time frame chart out here. Well, in order for this to get any kind of bearishness in it, you need to see it close back below 1998.88. That's its market profile resistance. That's its high level out there. Brought to us by our folks at Taz Professionals. Of course, you know, at the Hotel California, we open up shop here early. We now begin programming at 8 a.m., so you've got live programming 8 a.m. to 6 p.m., 5 days a week out here. There is nothing bearish. If we take, I take that back. On the 5-hour energy drink chart out here, you do have a potential key reversal session out here. This time frame does not close until 10 a.m. as well. So at 10 a.m., any kind of a tick lower, meaning below it opened at 2005.75, 2005.50, would actually be a key reversal session out there. That's what's going on the 5-hour chart. On the daily chart out here, what do we know about the futures contract for the daily? Well, number one, let's go take a look at expansions out here. Let's go from this little doji candle out here on July 24th down to the low that came in out here on August the 8th. What we'll see is, and the likely move, is to the price of 2011.75. At 2011.75, you're going to, whoops, I didn't mean to do that. We're going to get up to, I didn't mean to do that either. Let me come back and I'll draw that pattern back in. I guess I've got fast fingers this morning out here. There we go. Okay. Now we take a look at it. So we looked at the 120-minute chart. We know where the bears are hanging out. We also know where that A to B equals CD pattern is going to take us to, right? Between, 2008 to 2013. On a daily chart, we see a 1.272 expansion, says 2012. I have to say, 2012, that's going to get spiked. It should get hit out here I can't say without question, but it most certainly should get hit out here. Now, if you see it close above 2012, 2013, what's the next level up? Your next level up is that 1.618 expansion floor. That'll take you to 2044. So the 2013 level, we'll call it, 2012 on the daily chart, becomes a very important area for us to watch and observe. That's what's going on inside of the ES. Let's go take a look at the NASDAQ out here. Let's do the same type of a thing. And then after this minute and a half, what we'll do is we'll come back and we'll take a look at what happened on the longer-term time frame charts, meaning the monthly, specifically the NDX, which is strong like bull out here. If we take a look at the 120-minute chart here, for the NASDAQ, same situation out here, key reversal, bearish engulfing, not a evening star pattern out here, but if we take a look at its A to B equals CD, coming off of, in essence, the same type of swing points out here, A to B equals CD, we'll see that it's already attained the 1-to-1 A to B equals CD level. That was done earlier this morning as price got up to 4,093. What's the next level? Next level would be 4102. So any close above 4,096, that says 4102 is the next price point on its way. If we take a look at the 300-minute chart out here, the 5-hour energy, full of energy, nothing bearish about this stock chart pattern out here from a candlestick standpoint at all. If we take a look at the daily chart out here, let's go take a look at its expansion of swing points. I believe it's already at the 1.618 expansion. Yes, it is. Yes, indeed, you do. That was at 4,093. You're trading at 4,092.50, so it has hit that level. What's the next level up from there? Hey, I don't have it marked on my screen here, but it would be the 2.0 level. That would be TFNN 2.0. Just saying there. Folks, it is a terrific Tuesday. I hope you had a great holiday weekend out there. As always, thanks so much for joining us. This is Steve Rhodes. This is TFNN. We'll be right back.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Folks, again, hope everybody had a great holiday weekend. Hey, let's go all the way out to Hyde Park. Now, not to Hyde Park in London. Let's go out to Hyde Park in Massachusetts to John. John, thanks for calling. Thanks for holding. How you doing this morning?
Hi, Steve. I'm doing well. I just got to be on the road a lot today. And I was wondering, do you think that the IWM has has a fair chance of equaling or bettering its high?
Well, are you in a trade, or tell me
I'm in a short-term trade.
Okay, and the high you're referring to takes us back into that swing point here from July 2nd.
Right.
Yes. Well, well, of course, the answer is, of course, it has a chance to do it. Here's what it's done so far. Off of the bottom out here, and we're looking at the IWM specifically, off of that August 2nd bottom, if we just take a look at that lightning bolt pattern, the A to B equals CD pattern, it went ahead and completed the 1-to-1 level, and it did that on August the 27th out there. And then since then, it's just kind of been moving sideways. What you certainly want to see it do is get above the high here. I'm going to say the high of August 28th, which is the 116.94 level out there. And then its next stop is going to be 117.58. Maybe if it can get above, what you want to see it then do is really get above 117.58. Because if it does that, what you're looking at, John, is a move up to the 119 area. And at 119, that would be your 1 to 1.618 A to B equals CD expansion. That gets you so close to that July 2nd swing point that it then ought to tag it. The real trade here inside of the IWM, bullish or bearish, is the mere fact that it's been trading in a 13-point consolidation pattern for quite a while, all the way back into October. So what we're looking at, is that 8 months already? Something like that, I think.
Right.
I'm talking October of 2013. And so the real cool thing about the IWM is that a break to the upside, 13-point break to the upside, meaning a close above the 120 level. You should see 13 more points. Now, what I can say is this: if we see the IWM do that 13-point equivalent, if you take a look at the index itself, the Russell 2000, that will fulfill its, I think it was like a 16-year consolidation pattern or a 10-year consolidation pattern that takes it to the 1350 level. So one of the areas that you also want to be paying attention to is a break above that 121 area, because if we see that, it suggests that we will see that fulfillment of a 13-point move. Right now, of all of the four, meaning the SPYs, the Diamonds, the Russell, and the Qs, the IWM is the one that is the shakiest of all to be in a long position, just because it's just trading, with inside this consolidation pattern. Does that help you out, or?
Yes, it does. When would you say I should bail if it's, what would you say my negative point would be to get out?
I would say it would be some kind of reversal in the market today. I would say it would be something like, for example, something as simple as the VIX index. Do you follow the VIX index by any chance?
I look at it, right.
Oh, okay. So if the VIX index were to get below its 50-day exponential moving average, I'll give you the price on that here. That is priced out at above the 50-day exponential moving average. That's priced at 12.79. If you see a close above that today, that's a pretty good indication that it would be worthwhile to bail. Because what happens is that when that VIX volatility index gets above the 50-day, that's where you see the most erosion inside of a market. But other than that, just stay with your existing stops that you've got in place and, just trade it that way.
Thank you very much. You're very precise in your advice.
Well, I try to be as much as I can. Now let me ask you a question. Have you ever been to Hyde Park in London?
No, I haven't.
Oh, you've got to put that on your bucket list.
I do. I have a daughter that she's an economist, and she works back and forth between London and Ireland, so maybe one of these days.
Oh, you got to go visit her. Oh, it's a great area.
Right.
Yeah, it's a great area. Great area. Hey, safe travels. So be careful while you are driving out there, and thanks so much for listening. Thanks so much for calling.
Thank you for your help.
My pleasure.
Bye.
That was John in Hyde Park, Massachusetts out there. One of my favorite restaurants is in Hyde Park. They've actually got them now in the United States. It's a place called Zuma, Z-U-M-A out there. So I don't know if they've got them in your area. I know there's one down in Miami. I'm sure there's one up in New York. But the one that I first went to was in Hyde Park outside of London town. 877-927-6640. This is Steve Rhodes. This is TFNN. We'll be right back.
Look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow off 3 points. Trade out at 17,095. S&P up 2. NASDAQ Composite up 13. Russell up 3 points. NDX 100 up 12. New York Stock Exchange up 4 points. Gold back 18. Silver back 23 pennies. So we're going to switch over. Take a look at the monthly chart here for the NDX 100. What was interesting as I was looking through the monthly charts out here was I noticed that the NDX, the month here of August, was able to close inside its monthly swing point high out here. How about that, folks? We're talking about the swing point from March of 2000. Now, the low on that swing point is 4049.98. The actual close that we saw here last month was about 40 points above that. It closed out at 4082.56 out there. Anytime you close inside a swing point, it offers the, whether it's on volume or not, in this case here, I don't have the volume aspect, but I'll assume that it's on light volume, just simply because trading volumes in this day and age lighter than it was back in the past even. But regardless, whether it was light volume or not, when you close inside a swing point, that's why a key number to be watching now inside the NDX is going to be 4,049.98. Continued closes inside there when you close inside a swing point says you can go and test either the high or the low. In this case here, price is moving up, so it tested. It closed inside that swing point. It says that on the longer-term basis, we ought to see it move up to 4816.35. A rejection of that level, meaning in the month of September, closing back below 4,049.98. Well, then that game could be over. On a monthly basis, though, if we take a look at candlesticks, we look at reversals, we take a look at patterns out here, all that we can say is we're in the extreme overbought condition. That just tells us right now how strong this move is. We do not have a price relative strength divergent pattern or anything along those lines. So the NDX 100, remember, it's been all about the Qs, NQ, however it is you want to take a look at it. It still is that way. We want to be paying attention to that both for strength and weakness. And that's what was going on that long-term chart out here. If we take a look at something, let's take a look at the Dow on its monthly chart out here. If we take a look at the Dow, now the Dow here, I'm going to pull this back. And the Dow did have a reversal candle, a reversal signal, but that was in the month of July. And that all took place in one darn trading session out there. It was enough to destroy the chart pattern out there. And that was that July 31st session. What happened inside the Dow is it created a key reversal session out here. However, like any bearish signal, like any bullish signal, you want to see follow-through. In this case here, it's a monthly chart. You want to see follow-through on a monthly basis. We did not get that follow-through. The high of the month of July out there was out at 17,151.56. Where did we close out last month? Where did we close? 17,098.45. 17,098 versus 17,151. Now, at that 17,151 level inside the Dow on a daily chart, if we went back to a daily chart, we'll see a three drive to a top pattern. Now, normally, those three drive patterns, once they start working, which in this case here, the Dow did do its work, typically you don't see price move back up to that level. Look, a close above that high, that three drive to a top pattern failed. One of the most bearish reversal signals will have failed. There's nothing more bullish than a failed bearish pattern, especially a significant one. If we take a look at A to B equals CD patterns out here, that's coming off of the lows here. This is a monthly chart. We're looking at the lows from March of 2009, and that would become your A point. Your B point's going to be up here in May of 2011. Your C point, about a 38% retracement. That is on the month of October in 2011. We're already above the 1-to-1 level. So the next floor up inside of the Dow Jones is 18,552.98. The whole key is going to be getting above that reversal, that key reversal session. Again, that high is 17,151.56 out here. That's what's going on the longer term chart, on the monthly chart. If we go take a look at the S&P 5, well, let's go back to the Russell 2000. Let's go back and take a look at we looked at the IWM with John, but let's go take a look at the Russell 2000. We took a look at a 10-month current 10-month consolidation pattern that the Russell has been in. So breaking the high or breaking the low is going to be very telling, very important for us. Now, I was wrong when I mentioned to John that it was a 16-year or 10-year consolidation. It was a 17-year consolidation pattern inside of the Russell 2000. The Russell 2000 broke through that level. It gives you a price projection of 1350. As I mentioned to John when we were talking during that first breakout, after that first breakout there, was what's interesting about the current consolidation pattern is a break of those highs will fulfill or should fulfill this move to 1350. Right now you're trading out at 1176. Now the Russell 2000 on its monthly chart, it's the one that still has a bearish pattern out here on the monthly basis. However, bearish to slightly bearish. Why do I say that? Because we did have a price relative strength divergent pattern out here that was confirmed, that was in the month of July, but we did not get any follow-through here in August. In fact, we had such little follow-through that it eliminates that reversal signal that we see out here. So I'm not as concerned about the Russell 2000 and that reversal signal out here unless we see a break of that consolidation pattern on the daily chart. So this still looks very bullish as well when we take a look at the Russell 2000. Let's go take a look at with its fulfillment of 1350 out here. Let's go take a look at the S&P 500. I do recognize we're in one of the worst months of the year out here. Remember, we're looking at long-term charts, right? We're looking at monthly charts out here. So it doesn't mean that it is it comes to fruition today, tomorrow, or the next day. But if we take a look at the S&P 500, the S&P 500 out here, that's the weekly chart. I didn't want the weekly chart. I wanted the monthly chart. So now let's pull the monthly chart back out on our screen out here. If we take a look at the S&P 500. It's got a price projection. There's a 16-year consolidation move out here. It's got a price projection of 2350 out here. Is there anything bearish about the S&P 500 from a monthly basis? As I open this up, the answer is no. There was a chance, although there was no reversal signal here during the month of July. Look, that got completely eliminated. We've moved to higher highs on a monthly chart. It's going to require the month of September to be just absolutely horrible in order for that to give us a bearish reversal signal on a monthly chart. Otherwise, over the long haul out here, the S&P 500 wants to get into that 2350 level. Now, let's go take a look at some things that are moving and grooving inside the market out here. Let's take a look at something moving to the downside out here, and that is Cons Inc. CONN is the ticker symbol, up 27% this morning. Looks like they were out with the numbers generating revenues of $352 million versus $270. So, boy, beating the top line for their second quarter big time out here. Looks like the bottom line off just a bit, $17 million versus $19. So they bought a lot of revenue out there. Let's go see what the stock chart is doing here. Gapping down this morning, has some decent volume behind the move so far, 2.5 million shares. And voila, when we take a look at the stock chart, what does it have? It's got a high volume low out here. Now, that high volume low looks like it was tested. Apparently doesn't matter for this equity. On February the 20th, down with 25 million shares out there. That was not based on earnings out here as it is today, at least not according to my screen out here. So where is Cons headed to? Let's put this on a longer-term chart out here. Now, if it gets below the swing point, this high volume low from February 20th, that price point is at 31.88. You're trading at 32.50 right now, so it's got to clear that. That is our, maybe it's not our swing point. Let's look at at the weekly chart. Let's get a better idea of where Cons is headed to or potentially headed to if it breaks that swing point. Well, take a look at this. This does not look good, does it? And what I was looking for, what I was hoping to find for you was some kind of high volume bar on a weekly chart that it could be attracted to from a magnetic standpoint and also find some support. And I don't see that here at all. So if this closes below the low here from the week of February 17th, and that price point is at, again, 31.88, well, what it will do is to set up an A to B equals CD to the downside. That would be the best projection we have. Now, it's going to, the actual low, the actual swing is really March 10th out there. That's what I'm going to use as my B point. That is the 31.17 mark. So if it can close below that, that's going to set up a to B equals CD in this equity down to about the $2 mark. $2.80 out there. We'll take this thing one step at a time, but I hope that nobody is in con and is even trying to bottom fish this equity out here. Also moving to the downside, Wynn Resorts. I remember we looked at Wynn Resorts last week. I think we looked at it was trading into its market profile low on the weekly basis. Let's go back over to the daily chart out here, and I think we had so we've got a couple of different A to B equals CD patterns. So in the case of Wynn Resorts, right now what it's dealing with, it's trying to take out that swing point April 28th, 3.7 million shares down there, the low of which is 188.43. You're trading at 187.46 right now. Volume on that trading session, 3.7 million. Today so far, 380,000 in only 14 minutes worth of trading out here. So, the news in the casino business, at least in New Jersey, is not good out there. No idea if that's affecting things, but I will tell you that it closed below that swing point from April 28th out there at 188.43 will not be a good thing for Wynn Resorts out there. New Skin Enterprises, NUS is the ticker symbol. Let's go take a look at New Skin. This at one time was on an IBD list out here, of course. And when these IBD stocks get sold off, boy, they get sold off in a big way out here. If we take a look at the very first sellout here, institutions unloading this, that took place on January 15th. 9.9 million shares. Hey, they decided to unload even more that very next trading session out here. Oh, boy, come on, don't delay. That took place on January 15th. That had, what the heck? January 15th had, January 16th, I say, had 23 million shares to the downside out here. Well, we saw some more unloading taking place here not too long ago. August 6th, 11.9 million shares, and now we are seeing another move. Let me put this on a weekly chart, see if we can find any end to the move lower inside of New Skin out here. Well, it looks like it's going to come all the way back to a swing point out here from the trading session of December of 2012. Didn't take long to get back there, did it? This is why we use stops out here. Use stops, get stopped out, come back in, take a look and see if the trade is right, if you've got new information or you should be in the trade, whatever it is. Just make sure that you use stops out there. This is always a game. This is always a business about protecting our capital. And that's what you most certainly want to do. How about let's take a look at some things moving here to the upside. Right now, the Dow's off 36. S&P is basically flat, off 1 point out here. We take a look at Regeneron Pharmaceuticals. REGN is a ticker symbol. That is up 4% up $15 right now. Let's switch over back to the daily chart. Let's go see where Regeneron Pharmaceuticals is headed to. So gapping up at all-time highs, I believe, out here. Yeah, so we want to watch Regeneron just in case there is some kind of reversal in the market. Why? Because this could set up an island top. REGN is the ticker symbol. Just going to note it on my pad of paper out here. We'll just try to keep track of all the potential islands that are out here, and they are plentiful. Nonetheless, up today with volume of 355,000 shares out here. This thing has already made, looks to me like prices targeted at about the 377 level, where it'll go ahead and complete a 1 to 1.618 A to B equals CD pattern. That's coming off of the lows that formed out here on June 27th. That was your A point. Your B point of that lightning bolt pattern, that was the high from July 14th, and that was out at 320.08. Only makes a little less than a 50% retracement. That was down in July 17th out here. Your 1 to 1.618 A to B equals CD completes at 377.60. Looks like that is the target for Regeneron Pharmaceuticals. We got Tesla trading to the upside here this morning. TSLA is the ticker symbol, up about 3% of $7 and change. Tesla above its swing point out here that it recently formed back on August the 18th with 5.8 million shares. That was at a price level of 267. 267. That was taken out with 6.4 million shares. There's a small A to B equals CD to the upside inside of Tesla. I think there's a larger one, though. Yeah. Let's come back and take a look at Tesla. And that was the swing point that had 17 million shares from February 27th. That's really the key to be watching out here. And that price point is at 265, even Steven. Now, we've seen price get over it. On Friday was a very light volume, 6.4 million shares. Today, so far, 1.6 million shares. So volume is not too bad. Today, if you can see Tesla close above that 265 level, do with more than 24 million shares, that will set up a very large A to B equals CD to the upside. The B point on that being that 265 level, the C point being down here on May the 9th, out at a price point of 177.22. The 1-to-1 A to B equals CD says that Tesla would rise to the 326.12 area, right now priced out at 277.24. Also on the move this morning here, you've got Priceline. That's up $6. Not a big deal out there. Let's take a look at Synaptics. SYNA is the ticker symbol. That's up about 6% out here. I don't see any news behind its move. And this thing here, oh, how about this? This thing came back to a breakout area. It didn't get all the way down to the breakout area, but when we get back from this break here, we'll go back and we'll take a look at Synaptics. I'll go ahead and clean a few things off of the chart out there, and we will go from there. 877-927-6648. This is TFNN. This is Steve Rhodes. We'll be right back, folks.
It's better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's off 25. S&P is flat. NASDAQ Composite is up 9. We'll go back and do an overview of the market from when we opened, what took place. We were taking a look at the 120-minute chart earlier, so we'll go update that and a couple other things. But first, let's go back to Synaptics. SYNA is the ticker symbol. It's trading up about 6% here this morning, up $5. Now, Synaptics, SYNA, this thing really broke out with some wide price spread accelerated volume. That was on the trading session of June the 11th out there, 9.5 million shares out here. Now, unfortunately, it never came back to the breakout area. And you really have two different levels for that breakout area. Either the bottom of the gap up, that would have been the candle session from June the 11th. That price point was at $77.03. Or the second level would be the top of the gap, meaning the trading session that it broke, where the actual breakout began. And I can't tell you why my cursor is doing that. It's frozen, so there we go. Of course, that's not what I meant to do here. There we go, right about the 67 level. Hey, I kind of like that, the way that it does 13s out here. In any event, it came back into that level here with light volume. And good Lord, what is this doing? I'm going to go out here. I'm going to end up losing all the data that I had originally got rid of. But here's what we can take a look at. So this thing here pulls back with light volume. Again, your benchmark is 9.5 million shares. It pulls back with July 31st. Remember the tough day in the market out here, July 31st? Pulls back with 2 million shares. The very next day, gaps up on August the 1st out there. And it has some decent volume behind that gap, gets back inside that range where that gap up began. And now this is going to accelerate all the way up, back up to its swing point. Now, the swing point high is July the 3rd, very much like the markets, right? Or in many instances, July 3rd out here, 93.27. The volume there, 341,000 shares. You got to pretty much double it in order for. But if it gets above that, that'll set up an A to B equals CD to the upside. So if you're wondering where is it that Synaptics can move to, the price projection on Synaptics, if it takes out its B point out here, the 1-to-1 would take you up into the 108.61 level. Now, let's go back and take a look at the ES Mini. Let's go take a look at the 120-minute time frame chart out here so we can see what's going on. We saw that the key reversal session both on the NASDAQ and the ES Mini out here. That is a bearish reversal signal. What we have seen is we have seen some follow-through to the downside. Okay, so now where is price likely to head to? Well, First, we've got a old market profile out here, and the old level of support out here, that's the green line going across my screen, is right around the 1996 area. So 1996 would be my first estimate as to where price would head to. If we take a look at retracements, let's come off of the swing point low out here from about 6 to 8 a.m. That was on August 28th to the, oh, Lord, what am I doing out here? To the high that was put out, came in out here at about 6 o'clock this morning. What we will also see is so far the retracement has only been down to the 0.382 level, 1999. A break of 1999, that's going to bring your 1994 area into place. So that is level number, that is the first thing that we're going to be paying attention to. And we'll do that during the next hour. Of course, the other thing that we want to pay attention to, and I mentioned this to John in Hyde Park when we were taking a look at the IWM, he specifically asked me when would be the time to bail. And what I said was, John, if you see the VIX index close above its 50-day exponential moving average, which is priced at 1279 right now because of adjustments, it's at 1278. You're trading at 1264. That would be the signal to go ahead and bail to the long side. So far, what we've seen is a test of that 50-day exponential moving average, and it is held. But there's a lot of time left in the trading session. Folks, thanks so much for joining us here. Do hope you had a great holiday weekend and a great summer, and great to have you back with us. This is Steve Rhodes. This is TFNN. Have a great Tuesday if you're off to start your day. I look forward to seeing you soon. Take care now.
Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.